It's been just over a year now since the investigation into the Open Hand Foundation was conducted, led by the YouTubers Karl, Jobst, and Mutahar from Some Ordinary Gamers. Since their original publications, a handful of other content creators have also covered the story, citing the evidence presented by Karl and Mutahar. Today, as I search the Open Hand Foundation and other related searches on YouTube, I see little to no videos or updates from other creators revisiting this topic or providing much of an update on them. So what does all this actually mean then? I think a substantial amount of time has now passed, and we can start to look back on the evidence Karl and Mutahar presented in their investigation and come to some sort of conclusion about their research and the conduct by Open Hand. So why am I making a video about Open Hand and their alleged conduct? Well, for one, this story piqued my interest when it came to light back in 2023. Just for some background information on myself, I'm a licensed CPA and I've been an accountant for the past 8.5 years. I've mainly worked in the nonprofit sector. I first started as a bookkeeper for a small nonprofit organization. I then moved to a public accounting firm where I was responsible for performing audits and completing tax forms for those nonprofits. With my professional experience and expertise, I believe I can offer some nuance and context that was absent in the original investigation. I remember watching Mutahar's video where he asks for an accountant with some experience to look into this.
I want everyone professional in the industry to look into this because this is very, again, when I said that this raises red flags to any CPA or accountant that I've shown, there's a reason for that.
Ask and you shall receive, my friend. Just to get a few miscellaneous things out of the way, if you haven't noticed this already, this video is going to be long. I've gone back and forth in my head whether I should break this video up into different parts in an effort to make it more digestible, but I just can't. I actually don't think it's possible. There are just too many things that were absent in Karl and Mutahar's original investigation, and breaking those things apart in different videos could result in a story that just seems disjointed or disconnected. Also, I'm obviously not a content creator, so I apologize that the visuals of this video will be kind of stale and static, and I may sound a bit robotic as I read from my script, so I apologize. I hope the information that's enclosed represents its merit and not any of the visuals. However, I guarantee by the end of this video, you will learn a thing or two. This video has actually been pretty difficult to make for two reasons. First off, I'm gonna have to talk about Gerard, and he is obviously a rather disliked figure nowadays, for good reason. There's no doubt about it that Gerard lied to potentially millions of people regarding certain things with Open Hand. These are lies by Gerard, there's no doubt about it.
All the money goes to the Open Hand Foundation, an organization that we started in honor of my mom, and all that money goes to dementia research. We don't touch any of it, we just work with the people who do need the money, and we help them do their thing. All bits, all donations, all super chats, all YouTube memberships, basically anything that's tied to donating or subscribing in a financial way to us is going to charity. We're not touching any of it. It's all going for a good cause.
Every single time that he said that Open Hand doesn't touch any of the money generated by Indieland, this is a lie. At every single point throughout this controversy, Gerard was terrible. He was misleading, he was dishonest, he displayed a lack of leadership, he implicitly stated that he breached his responsibility as a board of director, he displayed a poor understanding of his own organization, he was honestly just awful. I truly can't think of one positive thing to say about how he responded to this. I cannot defend his lies, and I would not even try. Karl and Mutahar did a great job calling him out for not donating the charity money. They did the right thing by calling him out on his lies when he made statements to the public about organizations that Open Hand worked with. They did the right thing by calling his bullshit on his public statements that Open Hand doesn't touch any of the money generated from Indieland. I agree with all of that, and I do think Gerard got what he deserved for those lies. Gerard's poor conduct was alleged to have been considered charity fraud. This video is not going to dive into the allegations of charity fraud. The reason being is I believe that's more of a legal issue and less of an accounting related one, so it's not my expertise. Do Gerard's lies about not donating the money mean he committed charity fraud? Does Open Hand and Gerard lying about working with certain organizations constitute charity fraud? I honestly have no idea, and I hope it's something that someone with experience in the field of law will be interested in tackling. I understand that there's going to be people who just do not give a shit what's in this video and are going to think that even if Karl and Mutahar misled them, it doesn't matter because Gerard and Openhand got what they deserved for lying as much as they did. If that's the case, this video isn't for you and you just got back an hour and a half of your time. You're welcome. The second thing that makes this video challenging is that a handful of the info in it revolves around nonprofit tax accounting, and honestly, no person comes to YouTube for that shit. To be specific, this video will be addressing the accounting research, evidence, and calculations presented by Karl and Mutahar that led them to claim that money had been embezzled, pocketed, or was generally missing. My goal is to examine the evidence presented by Karl and Mutahar from the perspective of an accountant and come to some sort of conclusion on all of it. A majority of the discussion will be around Mutahar's research and evidence, since he was the one who did the deep dive, and Karl just relied on his research to make his questionable claims. With that being said, I don't want to make you sit down for a 90-minute video without at least having an idea what we will come to learn by the end of it. So if I had 1 minute to give you an idea of what we're about to look into, you're going to come to learn that Karl and Mutahar's accounting research, evidence, and calculations were bad. They lacked any application of actual tax accounting principles and were not based on tax accounting guidelines set forth by the Internal Revenue Code. Additionally, the evidence to support their claims is not reliable and does not meet any standard of proof in terms of tax accounting. Lastly, I'll showcase that both Karl and Mutahar were kind of in over their heads with this investigation and didn't exactly do the best job with their research. You can draw your own conclusions with what all of this means by the end of the video. In order to help you understand why their research and body of evidence was as bad as it was, I'm gonna have to talk about nonprofit tax accounting shit for probably 20 to 30 minutes, and I know that sounds really fucking boring, but there's truly no other way. The only way to understand what they overlooked and what they got wrong is to start with how this investigation should have been approached, because without that, their mistakes may not be clear. We'll use all of that info and relate it to Openhand along the way, and then we'll tie it all into Karl and Mutahar's evidence. Taxes are complicating, guys. It's really not as simple as just punching numbers into a calculator.
Because without receipts, our claims have no validity. You cannot take what I say at surface value. If I don't provide receipts, you, as a viewer, should question me on any statement that I make. That's just logical.
If you want to see the receipts, stick around. If you don't know the background of the allegations made against Openhand, here's a quick synopsis. If you do already know this, you can skip to the timestamp on the screen. Back in November 2023, both Karl and Mutahar published videos discussing the questionable conduct of a nonprofit called the Openhand Foundation. The purpose of the Openhand Foundation was to help provide funding and resources toward research to find a cure for frontotemporal dementia, or FTD. There were reasonable concerns made about Openhand because while they'd been saying for almost a decade that they were working with and assisting certain organizations linked to dementia research, it was discovered by Karl and Mutahar that this information was entirely untrue, and Karl and Mutahar published videos highlighting these lies and their questionable conduct, in which they were specifically alleging that charity fraud was committed by Openhand. These were entirely reasonable concerns to question. Why had Openhand been saying for years that they work with all of these organizations and are making progress toward dementia research when they were not? This clearly lit a fire at the Openhand Foundation, and shortly after their videos were published, they donated a substantial amount of their stockpiled cash, finally following through on what they'd said they'd been doing for years. However, only a few short weeks after those initial videos were published, Karl and Mutahar took their allegations one step further and claimed that they further investigated Openhand's tax filings and came to the conclusion that there was a discrepancy in the amount of revenue that was reported. These additional videos withhold the allegations that Openhand and members of the Khalil family were embezzling money or that money was generally missing, casting additional doubt on the legality of the nonprofit organization that is Openhand. Like I said earlier, I will not be addressing the allegations of charity fraud. I don't believe it's within my expertise. This video will specifically address the allegations of embezzlement and missing funds. In Karl and Mutahar's videos, they went over several years of OpenHand's tax filings. I'm mainly going to focus on OpenHand's 2019 year, since it's the year we have the most comprehensive information on, but I'm going to be referencing other years as well. Additionally, a majority of my discussion will focus on tax and accounting principles that were consistently overlooked in every year that they examined, rather than on specific calculations, so repeating the same points for each year would be redundant. Because tax accounting is so convoluted, I'm going to break down what I think are the 4 most important aspects as they relate to OpenHand's tax filing. We're first going to start with a discussion on financial statement reporting versus tax reporting. We'll then discuss public charities versus private foundations. We'll move on to program services versus fundraising activities. And lastly, we'll discuss program revenues and fundraising revenues and how they're reported and calculated in a tax form. Let's start with the discussion on financial statement reporting versus tax reporting. This is actually one of the more obvious mistakes that Karl and Mutahar made because they failed to understand that there is a distinction between financial statement reporting and tax reporting. In his video, when Mutahar tells you that all your revenues are everything that you made before any consideration of expenses.
If you have, let's say the golf event cost $60,000 to run, right? And it cost, and they made like what, 30,000? So $60,000 to run the event, but they made 30 grand. It wouldn't matter, okay? Because you would still see the $30,000 show up as part of the revenue, right? And the $60,000, if they chose to bill themselves or if they chose to take costs out of the charity, would be reflective. It would show up in the cost sections. Remember, revenue is all the money you've made before you start factoring in, oh shit, it cost me more to run it, so now the revenue that I made, I'm actually going into the loss, okay?
This statement is more indicative of financial statement reporting, and it doesn't always reflect how tax reporting works. A key thing you must understand is that financial statement reporting and tax reporting follow 2 different sets of standards. Financial statement reporting follows standards called GAAP, G-A-A-P, which stands for Generally Accepted Accounting Principles. GAAP is a set of standardized rules, guidelines, and procedures used in the United States to prepare and present financial statements. GAAP accounting is regulated by a body called the Financial Accounting Standards Board. Tax reporting does not follow the reporting standards spelled out by GAAP. They instead follow guidelines set primarily by the Internal Revenue Code, which is enforced by the Internal Revenue Service. The reason there are differences between financial statement reporting and tax reporting is because they serve different purposes. Financial statement reporting aims to provide a clear and accurate representation of a company's financial position for end users and readers of financial statements, whereas tax accounting is focused on adhering to IRS regulations to calculate taxable income and obligations. Tax accounting specifically for nonprofits focuses on ensuring compliance with IRS requirements while maintaining their tax-exempt status. Although nonprofits are not typically taxed on their primary mission-related income, they still must follow specific tax rules and file annual returns. Compared to financial statement accounting, tax accounting is much more rigid and governed by specific rules. Because financial statement reporting and tax reporting follow different reporting standards, there can be differences in the reported income on a set of financial statements relative to the tax filing. Let's take a quick look at an example of this just so you can see this for yourselves. Let's take a look at the December 31st, 2023 audited financial statements for the International Food Policy Research Institute. We're going to scroll down to a page called the Statement of Activities. This is more commonly known as the income statement or a profit and loss statement, where we can find their total support and revenue. One important thing to know about this audited financial statement is that these numbers are in the thousands, meaning that this isn't 111,879, it's 111,879,000. Total support and revenue for the year 2023, they have as $111,879,000. When we go to the International Food Policy Research Institute's 990 filing for 2023, we can actually see on line 12 right here that they reported $112,149,831 of revenue. We can actually compare the prior year as well and see that there are differences between them. So prior year's 990 revenue was $102,800,000. And if we look at the financial statements, they reported $102,528,000. This is actually a pretty well-known thing amongst professionals in this industry, and it's kind of why I assume that Karl and Mutahar didn't know this. I'll probably say this a few more times throughout the video, but nonprofit tax accounting is complicating. It's not just about punching numbers in a calculator. This upcoming section is single-handedly the most complicated aspect of this entire situation. I cannot stress that enough, so pay attention. In Gerard's response video to the accusations, he made everyone aware that while OpenHand was instructed to file a 990-PF, they were considered a public charity in the eyes of the IRS since 2015. He showed this document as proof. However, it's important to distinguish that their status as a public charity via this letter is only conditional until they fully complete their 60-month period, which is known as the public support test. In short, any newly incorporated tax-exempt entity will undergo this exact same 60-month public support test. The idea is that the IRS wants to generate significant data to prove whether the tax-exempt organization should be classified as a public charity or a private foundation. If after the 5-year period, more than 33 1/3% of the support that they receive comes from the public, then they will convert to a public charity. If they fail to meet this requirement, they will be considered a private foundation and operate as such. The thing about public charities and private foundations are that they function entirely differently. They're structured differently, they're funded differently, and they serve entirely different purposes. Public charities exist to provide support to the public, and they can earn revenues through things like contributions, grants from private foundations, grants from governments, as well as program revenues for the services they provide. Private foundations essentially support charitable organizations by providing them with financial support. Private foundations are also usually funded by a small number of people, someone like a family, for example, or a company, or a group of individuals who all share a common goal. When OpenHand became a tax-exempt organization in 2014, it makes sense that they considered themselves a private foundation, as their whole purpose was to donate funds to other charitable organizations. They weren't providing a service or good to the public. The problem they ran into, and why I assume they requested to terminate their private status only 1 year into their existence, is that their funding sources were not typical of a private foundation. The individual or organization that initially funds a private foundation typically determines its mission, selects the board members, decides how the funds are invested, and chooses the recipients of those funds. The Khalil family didn't fund OpenHand. OpenHand's funding came from the Gulf fundraiser and public contributions from the years 2014 to 2017, and then the Gulf fundraiser, Indieland, and public contributions from 2018 and so forth. So, we know from the evidence that Gerard provided that although they are seen as a conditional public charity, the IRS wants them to file the form for a private foundation. So now comes the confusing question of this whole situation. When it comes to OpenHand filing their taxes, what standard of tax guidelines are they supposed to follow? Do they follow the instructions of the 990-PF for a private foundation because that's the form the IRS told them to file? Or should they follow the guidelines of a 990 because they are conditionally considered a public charity? During this 60-month period, the IRS is essentially giving OpenHand a chance to prove that it meets the public support test. Until that period is successfully completed, the organization is still treated as a private foundation for most tax compliance and reporting purposes, including the forms they must file. This means they default to private foundation rules for filing, even while operating like a public charity. The benefit of this period is that the private foundations are not subject to certain excise taxes or penalties. They can accept tax-deductible contributions that an individual taxpayer can use as deductions on their taxes, and it's not subject to the 5% payout rule, which was one of the things Mutahar brought up in one of his videos. The fact that OpenHand has to file a 990-PF but are operating like a public charity is what makes this scenario so confusing. A public charity is required to detail a breakout of expenses, a schedule detailing their revenue, a detailed breakout of their public support, detail regarding their programs and the services they provide, a breakout of fundraising activities and events, amongst other things. A 990-PF doesn't require any of that information, at least in equivalent detail, which is one of the reasons why OpenHand's 990 filings look like they're lacking information. And I think it's one of the reasons why Karl and Mutahar was suspicious about them in the first place. A 990-PF doesn't even have certain guidelines that would apply to OpenHand, like how to calculate fundraising revenue, because private foundations don't host fundraiser events normally. Clarifying the standards that OpenHand must follow is key, as it's directly linked to the revenue errors made by Karl and Mutahar. The golf event and Indieland are considered fundraising events, and we're going to discuss that in more detail later. Private foundations can host fundraiser events, but they are subject to certain restrictions and compliance regulations. Also, since fundraiser money comes from the public, private foundations try to avoid getting most of their funding that way so they can keep their status as a private foundation. Because they generally don't host fundraisers, there's no way to account for them in a 990-PF. There aren't even any instructions in the 990-PF that will guide us on how to account for them. So there are going to be times that we need to consult the 990 instructions, which are the instructions that a public charity follows, and apply them to OpenHand's 990-PF filing. One of the most important discussions we need to have are the classifications of revenues that a tax-exempt organization can recognize. Understanding these will help us understand why it's classified the way it is, and therefore how it should be calculated and reported in a tax filing. So let's start with program services, okay? What is a program service? Citing the 990-PF instructions, program services are mainly those activities that the reporting organization was created to conduct and that, along with any activities begun later, form the basis of the organization's current exemption from tax. Some easy examples are things like a food bank holding a food drive and charging for the food that they offer, admissions to a concert or other performing arts event or to a museum, a hospital conducting medical research, a church or hospitality charging for travel fees associated with going on a religious pilgrimage, things like that. Remember when I said earlier that public charities support the public and private foundations support public charities or other charitable organizations? One of the ways they do that is through their programs. From a fundamental perspective, what this means is the beneficiary of a program service for a public charity must be the public, and the beneficiary of a program service for a private foundation must be another public charity or charitable organization. Or it can be an individual person as well. The complication with this definition and how it relates to OpenHand is they don't really provide a service to a charitable organization. The only activities that OpenHand is involved in that could constitute a program service is the golf event and Indieland. However, the beneficiary of these two activities is OpenHand themselves and not a public charity. If OpenHand were to run a program, the beneficiary would have to be a public charity that operates in the field of dementia or dementia research. Additionally, OpenHand can't run a program in which they are their own beneficiaries. That just doesn't make sense for a tax-exempt organization. Just to provide what an actual program service is for a private foundation, we're going to take a look at the Bill and Melinda Gates Foundation and walk this out step by step using their tax filings. Citing their 2023 990 PF filing, we're looking at a section called the Summary of Direct Charitable Activities. I'm just going to read the second activity that's listed here, and it states, "The primary focus is on ensuring that all students, especially Black, Latino, and low-income students, have an opportunity to earn a degree or credential that prepares them for a successful career and life." We can find more information on this exact program on the Gates Foundation website. Lastly, if we go back to their 990 PF filing, we can look into one of the public charities they gave money to support this activity. Let's take a look at the Alder Graduates School of Education because the funding purpose is titled K-12, so it's more than likely for this educational purpose. If we now go to their 990 form, we can see that their mission as a public charity is to recruit and educate excellent teachers and leaders who reflect our school's communities. Notice how the specific program that they fund has a very specific goal, a very specific target of people, a very specific initiative, and it directly benefits a public charity. This is what defines a program service. One attribute of a program service is it specifically constitutes an exchange transaction where the nonprofit provides something of value by a product or through a service that contributes to the organization's non-exempt mission. Another key concept that needs to be understood is just because an activity raises funds, it doesn't automatically classify it as a program service. You can find this information on the general 990 instructions, and it states, "Do not report a fundraising activity as a program service accomplishment unless it substantially is related to the accomplishment of the organization's exempt purposes other than by raising funds." Let's dissect this statement because it's really important to understand the differences between a program service and a fundraiser event because they do have similarities. The most important words in this statement are other than by raising funds. What this means is just because an activity or event raises funds or generates a profit, it doesn't make it a program service. A lot of program services and fundraising activities raise funds and generate profits. This allows the organization to know that they can continue funding the activity or the event. As long as the event or activity is profitable, then the activity can carry on. So just because an activity raises funds doesn't make it a program service. What makes a program service is exactly what we said earlier, an activity of an organization that accomplishes its exempt purpose. You need to separate the aspect of raising funds from the activity or event and determine whether the activity or event itself advances the mission and purpose of the non-exempt organization. Let's relate these definitions to OpenHand's overall mission. As a reminder, their mission is to provide funding and resources toward research to find a cure for FTD. Although their mission states an intent to provide funding, this cannot be used to determine whether an activity qualifies as a program service or a fundraiser, as the instructions explicitly direct us to disregard whether the activity raises funds or not. What this means is we need to look at the specific attributes of OpenHand's activities and determine if they help promote research to find a cure for FTD. If an activity doesn't get classified as a program service, it will very likely be classified as a fundraiser. We can't find a definition for what comprises a fundraiser in the 990 PF instructions because, like I said, private foundations generally don't conduct them. So we need to resort to the general 990 instructions, and it states, a fundraising activity is an activity undertaken to induce potential donors to contribute money, securities, services, materials, facilities, other assets, or time. They include publicizing and conducting fundraising campaigns, maintaining donor mailing lists, conducting fundraising events, preparing and distributing fundraising manuals, instructions, and other materials, professional fundraising services, and conducting other activities involved with soliciting contributions from individuals, foundations, governments, and others. Fundraising activities and events function similarly to program services, at least in the sense where there's an exchange between the organization and the participant. The biggest difference between a program service and a fundraising activity is the activity or event that makes up the fundraiser doesn't exactly contribute to the organization's non-exempt mission, even though the organization is the beneficiary. Just to offer a real-world example of a fundraiser from my experience and how it's different from a program service, when I was an auditor, I used to be part of the team that audited a large food bank. As with most food banks, their primary non-exempt purpose is to lead the effort to eliminate hunger in whatever region they're in. This food bank came up with an idea to generate proceeds by offering raffle tickets at local grocery stores. When you were at the register in one of these grocery stores, you had an option to add on $5 to your overall purchase, and in exchange, you'd get 10 raffle tickets from the food bank. You got 2 raffle tickets per $1 you tacked onto your grocery bill, but you could only get up to 10 each time you were at the register. If you received a raffle ticket, you'd also get an instructional sheet of when the promotion ends and when and how you can check their website to see if your ticket was drawn. The proceeds from the ticket sales obviously went to the food bank, but it didn't specifically advance their mission to eliminate hunger in their respective region. The proceeds were used to fund the nonprofit, of course, but again, this needs to be broken out very specifically. Does the sale of raffle tickets eliminate hunger in their region? No. At least not like their regular programs that they run, such as where they sell foods to schools in low-income areas at a more affordable cost. That's the difference between a fundraiser and program service. Now that we understand the differences between what a program service and a fundraiser is, let's discuss how their revenues are calculated and subsequently reported. Like I said earlier, they are both reported and calculated differently within tax forms. That's why they exist as separate classifications of revenue. You do not just add up everything and come to a conclusion. There are guidelines set out in the Internal Revenue Code by the IRS that we need to follow. To calculate and report program revenues, the 990PF states, for each program service activity listed, enter the gross revenue earned for each activity. The expenses for program services must also be detailed out specifically in the 990PF filing, and their instructions state, list the foundation's 4 largest programs as measured by the direct and indirect expenses attributable to each that consist of the direct active conduct of charitable activities. So program services and their revenues and expenses are easy to understand. We report the gross amount of revenue and we record and report all expenses related to those program services. However, we just learned that OpenHand doesn't conduct any programs. As a reminder, this is because a program for a private foundation needs to benefit a public charity or other charitable organization. And since OpenHand is the beneficiary of both the golf event and Indieland, it essentially disqualifies those activities as a program service for a private foundation, because they can't be their own beneficiary of their own program. So program revenues and how they're reported and calculated in relation to OpenHand isn't that useful of information. Lastly, how do we calculate and report fundraising revenues? Remember, the 990PF instructions lack the equivalent detail of calculating fundraising revenue, so we have to use the 990 instructions. Per the 990 instructions, we must enter the total amount of contributions received from the fundraising events, which includes, but isn't limited to, dinners, auctions, and other events conducted for the sole or primary purpose of raising funds for the organization's exempt activities. They also provide the following example. An organization holds a dinner, charging $400 per person for the meal. The dinner has a retail value of $160. A person who purchases a ticket is really purchasing the dinner for $160 and making a contribution of $240. The contribution of $240, which is the difference between the buyer's payment and the retail value of the dinner, would be reported on line 1C and again on line 8A. Those are references to a general 990 form, and we're actually going to see them in just a little bit. The key term to take away from this paragraph is the portion that represents the contribution, because that's one of potentially two parts of revenue that may be reported. While the term contribution can be considered a very general term, it has a specific meaning when discussing fundraising revenue. It represents the amount paid above the market retail value of what you're getting in the exchange. This type of contribution is called a quid pro quo contribution. And citing publication 557, it states, "A contribution made by a donor in exchange for goods or services is known as a quid pro quo contribution." It also provides the example, if a donor gives you $100 and receives a concert ticket valued at $40, the donor has made a quid pro quo contribution. In this example, the charitable part of the payment is $60. Fundraising revenue is unique because it's the only revenue stream that may involve reporting two distinct types of income: the charitable contribution portion and the net income from the event after subtracting the contribution amount. This net income would only be reported if the nonprofit specifically hosted or organized the fundraising event. If the nonprofit did not host the fundraising event and instead just received the proceeds passively from a third party, we would only need to report the amount given to them as a contribution and nothing else. We can confirm this is how it should be reported because the 990 instructions state, the organization must report net income from fundraising events as unrelated business revenue. I've already played this clip once before, but I need to do it again because it's relevant to this section. We just learned that open hands activities should be classified as fundraisers, and we learned that fundraising income is not reported as a gross amount, so the information given by Mutahar in this clip is incorrect.
If you have, let's say the golf event costs $60,000 to run, right? And it cost, and they made like what, 30,000? So $60,000 to run the event, but they made 30 grand. It wouldn't matter, okay? Because you would still see the $30,000 show up as part of the revenue, right? And the $60,000, if they chose to bill themselves or if they chose to take costs out of the charity, would be reflective. It would show up in the cost sections. Remember, revenue is all the money you've made before you start factoring in, oh shit, it cost me more to run it, so now the revenue that I made, I'm actually going into the loss, okay?
Let's take a break from Open Hand for a couple of minutes and shift our attention to an entirely different nonprofit. We're going to take a look at a real-world example of what fundraiser revenues look like in a tax filing. The reason that this is important is because this is what's happening in the background of Open Hand's 990 PF filing. Because the IRS asked them to continue filing a 990 PF, they're not required to provide a detailed breakout of their fundraiser activity. So it's important to see what it looks like firsthand to reinforce what I've been talking about for the past 8 minutes. Let's take a look at the Central California Food Bank 990 for their fiscal year of 2022. So we're going to scroll down to something called a Schedule G. This is a schedule that provides all the details related to fundraising activity. If we scroll down to page 2, we can see that under Event 2 that they also host a golf event. This schedule has detailed info that separates out the amounts received in contributions and the gross income of all fundraising events. Remember, contributions represent the amount that exceeded the market retail value of what the participants got in return. So not considering the $25,000 in contributions, we can determine that the net income for this golf event was $16,459. How do we know this? We take the $34,300 of gross income, we deduct $11,808 in rent facility cost, We deduct $6,033 in food and beverage expenses, and that brings us to the net income of $16,459. Where could this other income have come from? It's entirely possible that it came from things like the sale of raffle tickets, since they sold them before and during the event. They obviously also sold sponsorship packages similar to Openhand. It's also possible that some of this income is from the sales of merchandise, things like clothing or maybe reusable grocery bags. Not every fundraiser has merchandise made for the particular event. It's very likely that they just had stockpiled inventory of stuff that they bring to these events to also sell. We're going to shift our focus to the column on the far right here with all of the highlights, because this is the cumulative totals for all the fundraisers they hosted. We can see that they had $137,025 of total contributions, and that gets reported on its own revenue line. The gross income from all fundraisers is $147,275, and the total direct expenses are $66,761, bringing the net income total to $80,514. We can bring this amount back to page 1 of their 990 and see that under other revenue, they recorded $80,514, which is all of the net fundraising revenue income. Because the expenses of the fundraisers are already accounted for in this number, we know that they can't be accounted for down here in the total cost or total expense section. Lastly, we can take this information to another page called the Statement of Revenue, and we can tie out each and every amount that we just saw. Here's the $137,025 of contributions. If we scroll down to section 8 here, we can see the total gross income of $147,275 minus $66,761 gives us the net income $80,514, which is included in the total revenue amount of $96 million that can also be tied back to page 1 of the 990. If you've gotten this far, congratulations. We are finally at the end of all of the accounting and tax talk. Let's now take what we've learned in the past half hour and relate it to Karl and Mutahar's accounting calculations. Let's first start with the golf event. One of the troubles I ran into while evaluating Karl and Mutahar's evidence is, because they didn't base their evidence on any tax accounting principles, I basically had to infer what they were trying to say. When I say they didn't base their evidence on tax accounting principles, what I mean is, did you see them cite the tax instructions at all? Did you hear them mention anything that I discussed in this video? Did you hear them discuss the differences of program services and fundraisers, the complications with Openhand's private foundation or public charity status, quid pro quo contributions, indirect fundraising expenses, things like that? These are the types of things that must be considered when you're evaluating anything related to nonprofit tax accounting. And because I'd never heard them say anything about these, it's allowed me to come to the conclusion that their research lacked any application of tax accounting. So we basically need to reverse engineer into the tax accounting principles they were implying. I apologize. I know I've played this clip a couple times already. I have to play the relevant part one last time so we can take the info Mutahar gives us and apply it to the nonprofit tax principles we just learned, since he didn't do this in his investigation.
You would still see the $30,000 show up as part of the revenue, right? And the $60,000, if they chose to bill themselves or if they chose to take costs out of the charity, would be reflective. It would show up in the cost sections. Remember, revenue is all the money you've made before you start factoring in, oh shit, it cost me more to run it, so now the revenue that I made, I'm actually going into the loss, okay?
So Mutahar is implying here that the golf event should be calculated and reported as a program service, because like we learned earlier, program services report gross revenues and all expenses related to the program service. However, the golf event cannot be considered a program service for Openhand. This is because, again, a private foundation's programs must benefit a public charity, and we know that they didn't do that because Openhand was the beneficiary and not any charitable organization. This can also be confirmed because when we resort to their 990PF filing, we can see that no program service revenues were recognized. This means that when Mutahar tells you that $55,000 of golf sponsorship revenue should be counted towards 2019, he's incorrect. Since the revenue is not classified as program revenues, it's not reported as a gross total. This is one of the main reasons why Karl and Mutahar think that OpenHand is underreporting their revenue, because the revenue figure he's using and the tax accounting principles he's implying are factually incorrect. In order to come to the conclusion that the golf event is a fundraiser, we need to remind ourselves what constitutes a program service for a private foundation. The activity itself must accomplish the non-exempt purpose of the private foundation. Additionally, as if I haven't said this enough, a program service of a private foundation must benefit a public charity. Let's look at the attributes of the golf event and ask whether it accomplishes OpenHand's mission to promote research to find a cure for FTD. Remember, we need to remove the charitable aspect of the event and determine if the event itself progresses OpenHand's mission. Simply put, does a golf event promote research to find a cure for FTD? No, of course not. How does a golf event promote anything related to dementia or dementia research? Remember I said earlier that both program services and fundraisers constitute an exchange transaction? Meaning the participants of the activity get something in return. What do the people who buy a sponsorship package get in return? They get to golf. They get prizes, they get catered meals, and they get to have their companies advertised at the event. How does any of this exchange promote research to find a cure for FTD? Unless the golf event itself involved activities like education about FTD or direct engagement with neurologists or patients, it would not be classified as a program service. We have to also look at it from the perspective of who benefits from the private foundation's program services. We already learned now that private foundations support public charities. Who is the beneficiary of the golf event? It's OpenHand. Financially, they receive the proceeds from the event, and general awareness is raised for OpenHand. Lastly, and this is the most obvious factor when you apply some critical thought, no private foundation can run a program service in which they are their own beneficiary. That doesn't make sense for a tax-exempt organization. Ironically, there is already a word for when a nonprofit organization has an activity in which they are the beneficiary. It's called a fundraiser. So, let's relate all of this info to Karl and Mutahar's 2019 golf sponsorship calculations. According to Mutahar's video, he asserts that OpenHand should have recognized $55,000 of revenue. This was based on Mutahar's estimated 4 legacy sponsorship packages and 2 platinum sponsorship packages. I understand that this is an estimation by Mutahar, but it's the same estimation that him and Karl used to come to the conclusions that
I do believe the Khalil family have been stealing tens of thousands of dollars each year from charity donations, and the interesting thing about the money the golf tournament raises is that it seems to disappear.
Enough where I can confirm, at least based on how they've priced and what sponsorship tiers they've put out. I have lowballed, and they are still, in the land of underreporting the revenue.
So if it's good enough for him, it's good enough for me. In short, this assertion that $55,000 of revenue should be reported is incorrect, because that's not how you calculate fundraising revenues. In fact, because Karl and Mutahar aren't properly calculating the golf revenue, their calculations overestimate what the actual revenue should be, which is again why they think OpenHand is under-reporting their revenue. We know that his calculations don't take into consideration how much it costs for 48 players to golf, and potentially the 24 golf carts they'll be riding in. 48 player prizes, 2 catered meals and beverages for each of the 32 people who got the legacy sponsorship package, because there's apparently both a lunch and a dinner reception, so that's 64 meals. The 16 meals for the people who got the platinum sponsorship package, who knows if they get a second meal, and the costs associated with having their logos on banners and course signage. Again, this is indicative of a quid pro quo contribution, where we need to consider what the participants paid for to be able to play in the event. So if you want to calculate their golf fundraiser revenue correctly, you take the amount of cash open hand received from the sponsorships and you deduct the market retail value of everything the sponsors received in return. Because we know that they didn't take these into consideration, we know their evidence is incorrect. The fact is, we don't know how much all that shit cost, so we have no idea how much should be reported as revenue for the golf event. Even if you disagree, and you think that the golf event should be considered a program service, therefore gross proceeds should be reported, it honestly doesn't matter, because that's not how the tax filing was prepared. It was prepared as if they were fundraisers, and we just learned that gross revenues aren't reported for fundraisers. Because it wasn't prepared that way, we know that $55,000 should not be recognized as revenue. This is just in consideration for the year 2019. These concepts have to be applied to every single year that the golf event was held. So we additionally know that the other years that Karl and Mutahar calculated were also done incorrectly. This is arguably the most egregious aspect of their evidence because they thought the golf event was where the money was being stolen from. It's entirely possible that no money was stolen. Karl and Mutahar just didn't know how to calculate fundraising revenues the correct way because they failed to research this. Oh boy, this section is going to be rough. It's going to be tough because we're going to be confronting Gerard's lies, and we know that he definitely lied about Indieland. The other reason this section is going to be difficult is because it's kind of split into three parts: the tax accounting part, the critical thought part, and the stop believing everything you see and read on the internet part. That last section is arguably more important than anything else discussed in this video. Like I said earlier, we know that Indieland should be considered a fundraiser. Just as a reminder, this is because OpenHand is the beneficiary of Indieland, and a program service can't benefit the organization providing the program service. We can also ask ourselves if the Indieland event itself accomplishes OpenHand's mission. Instead of me telling you what Indieland is, let's have Karl tell us.
In 2018, Gerard helped create the Indieland Charity Marathon. This is where indie developers get to come together and showcase their games. It gave a spotlight to lesser-known developers, and it also raised money for a good cause.
Now ask yourself, does the showcase of indie games and giving spotlight to lesser-known developers promote research to find a cure for FTD? No, so it should be considered a fundraiser, and it should be calculated as such. There are hours of footage of Indieland out there, and there isn't any footage that would lead one to believe that what takes place at Indieland promotes research to find a cure for FTD. This means that just because a tweet said they made $109,418 in 2019, that gross amount is not what will be reported as revenue. So, Indieland is a fundraiser. But it's not a fundraiser in the traditional sense because the contributors and donors aren't really getting anything in return other than entertainment, but that seems impossible to put a value on. So this is not a quid pro quo contribution scenario like the golf event was. In situations like this, the most reasonable way to calculate what the revenue should be would be to deduct the direct costs of Indieland and net it against the gross proceeds, and it would all be considered a contribution. This seems to be what happened for Indieland 2019 at least, because even though there were tweets and posts saying that they raised over $100,000, OpenHand only recognized $82,419.19 as revenue. By the way, Gerard definitely got this information from the tax accountant who prepares their filing. There is no way that OpenHand figured this out on their own.
The 2019 Indieland's net proceeds were $82,409.19.
So with Gerard's response, he's kind of telling us that the total direct expenses related to Indieland 2019 were around $27,000. And this is our best guess, also using the tweet stating that there was $109,418 of preliminary earnings. So we just have to kind of guess what those costs were. Did they have to rent the cameras? Did they contract cameramen? Did they pay developers for spotlighting their games? Did they pay for any flights or hotels for the special guests who attended? The 2019 Indieland merchandise they sold, how much did it cost to make? Did they provide any meals or catering? These are essentially impossible to figure out because we don't have any support to help us understand what it costs to run Indieland. Unfortunately, there isn't much else to say about Indieland because we don't know a whole lot. The only thing we know is that it's a fundraiser, and just because a tweet said they had $109,418 of income, that is not exactly reliable evidence. Because Gerard said OpenHand doesn't touch any of the Indieland money, I almost feel like I can't fault either Karl or Mutahar for thinking they should have recognized all $109,000 that they publicly tweeted, but I also can't ignore that this reasoning kind of misses some important critical thinking. Honestly, when did Twitter become a reliable source of financial information, or just information in general? The fact is, a lot of info that people find online is not always accurate or doesn't tell the full story, and it really shouldn't be treated as reliable proof. Karl just learned this the hard way in his recent judgment against Billy Mitchell, and I'm kind of surprised that people still don't fully understand this yet. We're actually going to see a few more examples of this in a minute. So maybe this is just me and a product of being in the industry that I'm in, but when I see a tweet like this or a website that says something similar to this, I automatically think that there is no way that that entire amount will be the amount of revenue donated. My brain is wired to think that when it comes to fundraisers, there are always going to be expenses for every fundraiser. There's no doubt about it. It just depends on who foots the bill. Was it OpenHand or was it someone else? This is an important discussion to have because one of the things I've mentioned before throughout this video is how important it is to identify who hosted and organized the fundraiser, because that changes how the revenue is reported. Throughout all of my research, I found nothing conclusive. We know that Gerard is the main host of the event, but is he doing it on behalf of OpenHand, or is he doing it on behalf of the team that comprises that one video gamer, which he is also associated with? I found 2 Dexerto articles stating that the TOVG team was responsible for, quote, crafting and running the event since its inception in 2018. However, I found other random articles from Steam and on Tiltify stating that OpenHand hosted the event, it was hosted by The Completionist, or it may have been hosted by FlyQuest as well. Is there really a new organization hosting Indieland every single year? That seems odd to me, at least. A lot of what people find online isn't exactly reliable, and more to the point, financial information from the internet should never be treated as solid evidence when you're looking into tax discrepancies. So I guess I'm kind of split. I don't want to pile on Karl or Mutahar for thinking that all $109,000 should have been recorded as a donation. They're self-admittedly an ex-speedrunner / ex-online dating coach and a computer scientist. I wouldn't expect them to know how to ask the right questions or where to find the right answers. I'm just conditioned to think that just because a website or something says X amount of money was raised, more often than not, that doesn't mean X amount of money was donated. Karl said in one of his videos that he finds it odd when Gerard just stopped posting about the amount of money that Indieland raised.
What's also interesting about 2019 is that it's the last year that Indieland, or The Completionist, publicly stated what Indieland had raised in total. From this point on, they make no mention of this, which is strange. You would think a charity event would state how much they raised after it had finished, and they did proudly do this for the first 2 years. But then, as soon as the tax filings became weird, we started hearing nothing.
I get where he's coming from because it does seem like this is something a lot of charities would do, but that's just not often the case. My problem with this statement is it's a stretch. He's basically insinuating that because they stopped making posts or tweets about the money they raised, it lines up with the allegation that they are stealing the money. It's just not a strong correlation. It's a bit exaggerated. That's like saying Karl can't defame Billy Mitchell by insinuating that he was partly responsible for Apollo Legends' death, since Billy's credibility with the public was already impaired because he likely cheated at Donkey Kong. Again, I understand why people would think that charities would often post about how much money they raised, but they really often don't. Seriously, how often does anyone waste their time checking to see if a nonprofit made a follow-up post detailing the amount of money they raised? The only way you can confirm this is by trying to do some research yourself, and I encourage you to do it. Try to look up a fundraiser and see if you can find a follow-up post detailing how much they raised. I'm confident that your results are going to be mixed. You're going to find some that say an exact amount of money they raised. Some will give a follow-up post about the event, thanking people for coming to the event, but not post an amount raised. You'll find some others that don't make a follow-up post whatsoever. Sometimes you'll find that they said they raised X amount of dollars, and then you can take that information and check the nonprofit's tax filing they donated it to. And you'll see that an entirely different number was actually donated or recognized as a contribution. I guess people don't know this, but this is more common than you think. You probably just haven't looked into it before. It's important for people to know that just because a website or a tweet or anything you find online states that X amount of money was raised, that doesn't always mean that's what gets reported as the donation. Let's take a look at a couple of examples. So we're looking at a web page from the Sunmark Credit Union where it states that they raised a record-breaking $85,000 for their Sunmark Charitable Community Foundation. This was specifically in relation to the annual charity golf tournament that they hold, and this was for the year 2022. When we go to the Sunmark Charitable Community Foundation 2022 990PF form, we're going to scroll down to the Schedule B, which is the schedule of contributors. When we go to the actual listing, we see that the Sunmark Credit Union only donated $50,000 and not the $85,000 that was raised according to the website. We can also see for the Sunmark Credit Union, their 2023 annual charity golf tournament raised $80,000 for the Sunmark Community Foundation. When we go to the 2023 990PF filing for the Sunmark Charitable Community Foundation, we're going to go to the Schedule B, the schedule of contributors. When we go to the listing, we're going to see that they actually donated $55,000 of the $80,000 that was raised. This is a webpage from the Bright Bridge Credit Union, who is affiliated with a foundation called the RTN Goodworks Foundation. In 2023, their golf tournament raised more than $35,000. When we go to the RTN Goodworks Foundation 990EZ form, we're going to scroll to the Schedule G, because again, this is a golf event that they hosted. We can see that the gross receipts were only $31,382, even though the website says they raised $35,000. And just to really fuck with you and reinforce the entire purpose of this section, the net income related to just this golf event was only $12,981. How do we know this? $24,038 of contributions is going to be reported on its own revenue line. The gross income of the golf event was $7,344 minus $17,117 of rent facility costs minus $1,284 of other direct expenses, which means that this golf event actually had a net loss of $11,057. If we add the contributions and the net loss, we come to a total of $12,981 of total revenue just for this golf event, even though the website said they raised $35,000. The actual net income for this golf event is only around 1/3 of what they actually reported on the website, so stop believing everything that you read on the internet. Lastly, we're going to look at the Affinity Federal Credit Union's website, where they said they raised over $200,000 for their 2023 annual golf event. It says specifically that they raised $214,696.25. When we go to the Affinity Foundation's 990 form for the year 2023, we're going to scroll down to the Schedule G, because again, this was a golf event that they hosted, and see that their gross receipts were actually $219,741, even though the website said they raised only $214,000. See what I mean? This isn't a problem of organizations underreporting their revenue, or missing funds, or organizations lying about the amount of money they raised. It's a problem of people believing what they see on the internet and treating it as gospel. This is the main issue with Karl and Mutahar's evidence regarding Indieland. Not only does their evidence lack any reasonable application of tax accounting principles, their receipts that they brag about amount to tweets and shit they found on random websites. Those are not receipts by any reasonable metric in the world of tax accounting. These two are levying allegations of embezzlement and missing funds. Okay, these are fucking felonies. The standard of proof needs to be much higher with this investigation than your normal run-of-the-mill online investigation about manipulation in the retro video game market or investigating the conduct of a transgender activist. Unfortunately, this is a downside in the realm of online investigative journalism. Not all information that you need to confirm your accusations will be readily available online. It's actually impossible to investigate tax discrepancies online because the information to substantiate their claims cannot be found online. So while their evidence qualifies as credible evidence in the world of online investigative journalism, it certifiably does not qualify as evidence in the realm of tax accounting or accounting in general, and is not credible enough to confirm allegations of embezzlement or missing money. If you need any proof of this, go research any actual financial crime and see if any of the financial support comes from Twitter or Tiltify. Spoiler alert, it never does. The fact is this: it costs money to conduct a fundraiser. Whoever ends up footing the bill is not going to just eat the entire amount as expenses. The examples of the credit union we just saw, according to them, they raised $165,000 in 2 years, and I believe that they actually raised all that money, but they only donated $105,000 of it. Ultimately, they are a business, and one of their goals is to keep as much of their money as possible. In doing so, they get to earn more interest off the money they loan to people, and people can continue to get the big homes or cars or whatever they want because the credit union has more money to loan them. They're not going to willingly burn $60,000 in 2 years and not at least reimburse themselves for the expenses they paid for to run the event. They wouldn't have been able to donate $105,000 if they didn't spend the $60,000. While Gerard's repeated dishonesty and lies regarding Indieland are deeply concerning, he has also consistently demonstrated a limited understanding of his own nonprofit. So again, I'm kind of split on how to feel. What I ultimately know is information found online is not always reliable. Specifically, financial information found online is never reliable. Simply put, there is too much information that we don't know to be able to confirm anything related to Indieland. So I'll say this one last time. Stop believing everything you see on the internet. Let's give one last listen to the claims made by Karl and Mutahar regarding all of their evidence.
To understand if all the money isn't accounted for in a charity when you are raising money for the charity, the government considers that to be illegal. That can be fraudulent. That could be embezzlement. That could be mishandling of funds, which is a severe illegal no-no. What appears on the surface is that there is a pretty glaring discrepancy in the revenue that is reported. It seems that the Open Hand Foundation may be underreporting their actual money.
I do believe the Khalil family have been stealing tens of thousands of dollars each year from charity donations.
Because now we don't even have trustworthy accounting at this moment.
And the interesting thing about the money the golf tournament raises is that it seems to disappear.
In the signature section, it says, under penalties of perjury, I declare that I have examined this return, including accompanying schedules and statements to the best of my knowledge and belief. It is true, correct, and complete. Again, ladies and gentlemen, this is a crime. Perjury. Again, I am just doing the most basic third-party accounting that I can do. I can only imagine what the IRS, the DOJ will find with books this seemingly fucked. And they are still, in the land of underreporting the revenue.
Let me be perfectly clear. Karl and Mutahar confirmed nothing with their research and evidence into the allegations of embezzlement or missing funds. Period. Frankly, no qualified tax accountant, CPA, or accounting professional would have come to the conclusions that they did based on the evidence that they presented. It simply does not hold up under any professional standard. But Karl and Mutahar aren't tax or accounting professionals, so that kinda checks out. Unless you had direct access to their books, bank statements, and receipts, no one can certifiably claim that they caught anyone pocketing money or claim that money is missing. Unless Karl is holding back some clear, indisputable evidence, something that directly shows funds meant for Open Hand were diverted to Gerard or another member of the Khalil family, then he doesn't have shit. It's not even up for debate. As far as Mutahar goes, he's culpable for performing poor research and not understanding nonprofit tax accounting. I know he said a few times in his coverage that he did the most basic third-party accounting he could, but that's part of the problem with his research. Accounting isn't basic. Tax accounting isn't basic. Nonprofit tax accounting is definitely not basic. Allegations of missing funds require more than just a cursory review. His research should have been far more thorough. And this is honestly what's most disappointing about Mutahar's research and evidence. I've seen a lot of his videos, and I hear him say consistently that he considers himself a good researcher and he won't disseminate information unless it can 100% be verified. But he didn't do that here, not even close. This is just my opinion, but it seems like Mutahar realized this at a certain point too, and when he realized he didn't have what he needed to confirm his theories, he just made something up and pointed the finger at Open Hand for why that was. We'll talk about that shortly. At the beginning of this video, I said my approach was to examine the evidence presented by Karl and Mutahar and come to some sort of conclusion on all of it. In terms of the golf event, their accounting research, evidence, and calculations were shit. Their research and evidence was lackluster, which isn't surprising given that their research appears to have relied largely on looking at pictures online and Google searches. Their accounting evidence failed to incorporate any fundamental nonprofit tax principles, and it clearly demonstrates that they did little to no research on this. Karl mentioned in one of his videos that something like fraud is really hard to prove.
I'm not sure why they brought up the IRS, but this assumes the IRS is some kind of omnipresent being that immediately detects fraud the moment it happens and intervenes. This notion is simply untrue. Many crimes, especially fraud, go undetected, and unless you do something especially egregious on your filings, nothing will be flagged to the IRS.
I agree with this wholeheartedly, which is kind of why I find it odd that these two internet accountants can somehow believe that they can prove money was missing or embezzled because of looking at photos online and punching numbers in a calculator. Regarding Indieland, I'll give the benefit of the doubt to them and assume they were misled by Gerard, who repeatedly claimed, falsely, that they never touched the funds generated by Indieland. However, their research, evidence, and receipts amounted to tweets and posts online. If you're turning to Twitter for credible information, then we're dealing with a whole different kind of fucking problem. In fact, Mutahar himself admitted something about Twitter that I found interesting.
But what was really wild to me was how some of the individuals, at least on Twitter, and again, I don't use Twitter as an intelligent metric.
Twitter may not be a reliable source of intelligent information, yet it was somehow considered sufficient to support allegations of embezzlement or missing funds. It's quite the contradiction, if you ask me. When this story came out, and we only knew about the money that hadn't been donated, Gerard and Open Hand's conduct needed to be called out. I think we're all glad that it was. I think we're all glad that they finally donated the money. From here on out, I'm sure everyone who spends their life online will keep a watchful eye on them. However, I just can't figure out why Karl or Mutahar decided to take it to the next level and accuse them of stealing money or missing funds. Do people really think that you can substantiate those claims based off the random shit you find on the internet? Mutahar apparently faced some heat from people who blamed him for performing, quote, bad math.
I really did attempt my very best at trying to identify the possible revenue sources for that lowballed math that I did. You can say bad math, but again, I am lowballing based on what I can reasonably deduce.
It's not bad math, Mutahar, it's bad accounting and a bad understanding of tax accounting. Math is an element of accounting, yeah, but it's a very small aspect of it. Any fifth grader can punch some numbers into a calculator. It doesn't make them ready to become a tax accountant. I don't doubt that Karl and Mutahar tried their best in researching this, but just because you tried your best doesn't mean you did well at all. Not only were their tax calculations done incorrectly, not only was their evidence not credible, I'm of the opinion that their overall efforts that they employed to research the claims of embezzlement and missing money was shit. I just spent the last 40 minutes explaining to you that they put in zero effort to actually investigate how to report nonprofit revenues in a tax form. There are several other examples where Karl and Mutahar either didn't fact-check what they were saying or didn't really understand what they were looking at. So instead of digging deeper, they just speculated and added more doubt to OpenHand's already shady behavior. Karl and Mutahar were already called out by some people regarding one of the mistakes in their investigation about the tax filings lacking a signature.
Then he in this video mentions the point of electronic signatures as if that was a massive point in the original videos anyways. It wasn't.
Don't let Mutahar fool you here. Whether it was a big or little point is irrelevant. If it wasn't a major point, then why was it part of their videos in the first place? Think about it. Karl and Mutahar are trying to tell you a story of deception and are questioning the legality of OpenHand's conduct. These other small problems that they bring up with OpenHand help bolster their larger claims. Mutahar is missing the bigger picture here. It's their lack of effort to fact-check their own assertions they made in their own videos. Nobody asked Karl and Mutahar to make a video about embezzlement or missing funds. They chose to do that. The viewers are trusting Karl and Mutahar to tell them factual information throughout their coverage. Rather than Mutahar take responsibility for the mistake, he just shrugs it off and acts like it was never really that important to begin with, so it's like it doesn't even matter that they got it wrong. Ironically, in this video, Mutahar actually points out a second oversight he and Karl made in their original investigation.
Now, in this video, I just want to stress for the record, when it came to the golf tournament, some of the money that was pledged was apparently by Gerard and their own statements could have been rolled over into following years, right? Which absolutely is something that could happen, and I'm glad they clarified it.
What Mutahar is referring to here is something called an accounting methodology. In short, an accounting methodology helps determine when an organization should be recognizing revenue and expenses. OpenHand operates under one called the cash basis, which means that they record revenues and expenses when they directly receive money or pay the money out. This means that money owed from a prior year can be paid and counted as revenue in the current year. Mutahar mentioned that he's glad that they finally clarified this. The problem with this statement is OpenHand never actually needed to clarify this because it's explicitly stated on the first page of every single one of their tax returns. This information was always out there. Karl and Mutahar just don't know where to look for it. Rather than Mutahar take responsibility for not noticing this before or acknowledging how this information might have challenged his and Karl's initial claims, he deflects it entirely, fabricates a lie, and shifts the blame onto OpenHand. Let's listen to the clip in full.
Now, in this video, I just want to stress for the record, when it came to the golf tournament, some of the money that was pledged was apparently by Gerard and their own statements could have been rolled over into following years, right? Which absolutely is something that could happen, and I'm glad they clarified it. Again, the fact that he's out here mentioning numbers down to the penny shows that there is a QuickBooks, some accounting that's present, so I would be very much down to see these actual statements. A bank statement, an expense sheet. If you're itemizing and you're down to the dollar, clearly you have this information, and I just want to see it. I think most people want to see it, and you're a public charity, you should be showing it. It shouldn't be pried from your hands.
Mutahar actually made several other statements like this throughout his coverage.
You should at least show a bank statement. show a bank statement. So I'm here to offer my response to Gerard's response with receipts, something that I personally believe Gerard did not do at all in his video. I never saw one bank statement, never saw one evidence of money flow. And you have the books, you have the accounting, just, again, if you could show us the receipts. Why don't you show us an actual accounting of it? Why don't you show us the actual receipt on the video? But I am reasonably suspicious about the reported revenues, and that's something that can easily be rectified had you provided a receipt. As they are a public charity, they should give an exact dollar amount. These books should not be pried from their hands. They should be opened in their hands, so to speak.
Mutahar is insinuating here that nonprofits are basically required to show the public their books, including things like bank statements and receipts whenever they're requested. That is a flat-out lie, and I don't know where he got this from or why he made it up. What we're looking at right now is a document sourced directly from the IRS website, and it's a document that essentially covers public disclosure. This document will tell us what information nonprofits are required to make available to the public. If we scroll down to section 5 right here, we can actually see some examples of what a nonprofit is required to disclose to the public. Things like annual returns for 3 years after the due date, all Form 990 schedules except portions of Schedule B, your application for exemption and all supporting documents, as well as the IRS determination letter that shows your organization has a tax-exempt status. This document will also tell you things that you are not required to share. And if you just look at the first sentence here, no, you're not required to share all business documents. So again, no idea where this came from. Okay, a little post-editing adjustment here. It's not fair for me to say that Mutahar was explicitly lying here. I've never had a conversation with him, so I can't convey that confidently. It is, however, very possible that Mutahar just thought this was correct, and instead of researching it further, just stated it as a fact. The latter seems like a likely explanation, especially given that other aspects of his research also show little evidence of a thorough investigation. I understand that this may upset some people because for some reason people think that they're just entitled to any information whenever they ask for it, and then if you don't provide it, you must be hiding something. The fact is, all of this relevant information has already been shown to the tax preparer, who, by the way, has been a licensed CPA for over 40 fucking years. They know more about tax accounting than Karl or Mutahar will ever learn sitting in front of their computer. This is why we have licensed professionals in almost every single field, so you can let a professional who knows what they're doing take care of it for you. It's exactly why you shouldn't let an ex-speedrunner / ex-online dating coach and a computer scientist prepare your taxes for you, because they may get lost in what they're doing and think you're embezzling money or have missing funds. While I recognize that these claims were made explicitly by Mutahar, I have no doubt that Karl felt emboldened to accuse Gerard of embezzlement and suggest that Openhand was misappropriating funds, largely because of how confidently Mutahar presented this false information. I can't stress this enough. This shit is pervasive across Karl and Mutahar's research into the allegations of embezzlement and missing funds. There are other examples of misleading statements that they made that are easily fact-checkable if you know what you're doing and you know where to look, but they don't. They purposely did not research certain things so they can speculate and cast more doubt on the legality of Openhand's conduct. Let's just take a look at another example right now. I didn't talk much about the Syzygy Foundation in this video, and that's mostly because I was trying to focus on the evidence of embezzlement or missing money regarding the golf event and Indieland. However, Mutahar said something really strange when he was looking into the contribution that they make to Openhand. In Mutahar's videos, he consistently classifies the money they give as a grant.
The grants from Jamie Lee Curtis.
The clip in question is kind of long, and this video is already long enough, so I'm going to post it in the background and just talk over it. If you want to listen to it yourself, the video title is on the screen. In this section, he's reviewing the donation the Syzygy Foundation makes to OpenHand, and he feels like he's made a...
What's another interesting catch for me over here is...
This entire segment is him looking into whether a private foundation, like the Syzygy Foundation, can give a grant to another private foundation. My issue with his so-called interesting catch is how he handled it. It not only exposes the weakness of his investigative work, but also highlights his bias throughout the entire process. By the end of this clip, he questions the legality of whether OpenHand can accept a grant from another private foundation.
Representing themselves on filing as another private organization. It's actually an interesting catch, and I want to know what the legality around that necessarily is.
I don't want to go on for too long about this, but a grant is so inherently complex and it requires a ridiculous amount of reporting and paperwork. Grants are essentially funds given from one entity to another to fund a very particular project. There are a lot of different types of grants, and they are all very complex, and they must adhere to very strict compliance regulations. Again, grants are super complicating, and they're the exact opposite of a contribution. A contribution is just one person or organization giving another organization a donation of cash or another asset. There is often no middleman. It's just a simple one-way transaction. Not all the time. Sometimes there are things like PayPal or a broker that facilitate a transaction, but they really just act as intermediaries. Want to know something interesting about the Syzygy Foundation money they give to OpenHand? It's not a grant at all. It's a contribution, and we can confirm this with little to no effort. If I go to the 2022 990PF filing of the Syzygy Foundation, I can find the exact same contribution that Mutahar found in the video. If I scroll up one entire page to this section called Supplementary Information, I can see this information in box 2 regarding contribution, grants, gifts, loans, scholarship, etc. programs. And the box says, check here if the foundation only makes contributions to pre-selected charitable organizations and does not accept unsolicited requests for funds. If the foundation makes gifts, grants, etc. to individuals or organizations under other conditions, complete items to A, B, C, and D below. We can see that they obviously checked the box up here and they did not fill out the lower information. So this is a contribution and it's not a grant. All Mutahar had to do was scroll up one page on the form that he was already looking at, and he could have found this information. But I have a slight feeling that Mutahar doesn't know what he's looking at or what he's looking for, so he missed it. Instead of looking into this himself or asking a professional, he chose to freely speculate and cast more doubt on the legality of OpenHand's practices, thereby reinforcing a narrative already biased in favor of the evidence he's found. This is actually indicative of something called a confirmation bias. A confirmation bias refers to the tendency to seek out, interpret, or prioritize information that supports one's pre-existing beliefs while disregarding or downplaying evidence that may contradict it. This was never an interesting catch by Mutahar. I'm not bothered by the error. Mutahar is a self-proclaimed computer scientist. I wouldn't expect him to know this stuff or where to look to find answers on it. Again, it's this very clear lack of effort to investigate something he's unfamiliar with. So he chooses to not investigate it, speculate on it, and cast more doubt on OpenHand's conduct. Despite the fact that throughout his coverage, Mutahar kept telling everyone that he wasn't trying to speculate on certain things.
So I'm not going to start assuming things, okay? Because clearly I'm not here to speculate. But again, I'm not here to speculate.
Their research and evidence into the claims of embezzlement and missing funds is not coming from a place of honest research, because they honestly didn't research a whole lot. They assumed that they knew what they were doing and they ran with it. Karl and Mutahar may claim that their small errors they made aren't big points in their investigation as a whole, but that's just a bullshit response. They're the ones who said it. They made it part of their videos. They're the ones who brought it up. They're the ones who confidently asserted their claims as fact. If they got so many easily verifiable facts wrong, it raises serious questions about what else they may have misrepresented.
And as unfortunate as this situation is, it does need to be called out, and there do need to be repercussions.
I pose these questions to you in closing. It's been a year and a half since these allegations were made by Karl and Mutahar. If Gerard was caught embezzling money, how come we haven't heard anything about this since then? If Openhand was caught pocketing money from the golf event, then how the hell are they still able to host golf events that benefit Openhand? If there was any trace of missing money or unaccounted money, why are they currently in good standing with the IRS? If you don't believe that last statement, you can fact check it yourself. Call the IRS and ask them about Openhand. Be prepared to give them your name and information. I also want to end with a short blurb about Openhand as an organization. They very clearly failed the public in many ways, not just in their false statements regarding the organizations they worked with, not just failing to donate the money in a timely manner, but they clearly lacked governance and oversight of the entire organization, which is the bare minimum that they owed to anyone who made a donation to their foundation or who spread goodwill in their direction. That isn't solely Gerard's fault, as he's just one of the 5 board members. All board members bear that responsibility. With that being said, Openhand as a nonprofit seems in limbo to me. They very clearly want to exist as a private foundation, but they very clearly operate like a public charity, and you just can't have that. When I spoke to the IRS about Openhand, they informed me that they are in good standings. However, I could not get a clear answer on any recent tax filings. For those who don't know, if your organization fails to file a return for 3 consecutive years, your status as a tax-exempt organization gets revoked. I couldn't locate or gain access to a 2023 filing anywhere, and I tried hard to look for that shit. Their tax filing always seems to be submitted at the end of Q3 or within Q4 of the following year, so we'll see near the end of 2025 if there was a 2024 return done. If we don't see a 2024 return, I think it's very possible that Openhand Foundation will cease to exist come 2026, and maybe that's deserved. However, it's important to note that if that does happen, they still have a war chest of cash sitting around, and they're running golf events in 2025, so hopefully we see that money get donated. Undoubtedly, there are aspects of Openhand and Gerard's conduct that needed to be called out and addressed. With that being said, I really can't understand why Karl and Mutahar took it to another level to allege that money was being embezzled or was missing. They very clearly did a poor job of researching these allegations and presented misinformation and factually incorrect information along the way. Unfortunately, no one can reverse the sands of time and take any of it back. There is no fixing this. As far as we know, this is now in the hands of the IRS. We will all know within due time whether these allegations carried any weight or not. And I'm sure some video essayist years from now will make an hours-long documentary covering the saga in its entirety. Thank you for watching. This video only covered a handful of information regarding Openhand, as well as only addressing some aspects of Karl and Mutahar's investigation. There are honestly numerous other topics we could explore and many different directions this conversation could take. For example, I do have some disagreements with how Openhand's tax form has been prepared, but that's the responsibility of the tax preparer and doesn't really have to do with Openhand. With that being said, none of my disagreements would pay favor to the idea that money is being embezzled or has gone missing. It's just kind of laziness in the preparation. I also originally had a 15-minute section going over cash basis accounting and how easy it would be to actually catch Openhand embezzling money because they follow that accounting method. But this video has to come to an end at some point, and this is it. Thanks again if you've made it this far. Hope you learned a thing or two.